नमस्ते दोस्तों, आपका वैल्यू एजुकेटर चैनल में स्वागत है, जहां आप सीखते हो स्टॉक मार्केट में इन्वेस्ट करके आप कैसे पैसा बना सकते हो। तो मेरा नाम है शशांक और आज हम ये वीडियो में डिस्कस करेंगे आरती फार्मा लैब्स और आरती ड्रग्स का जो बिजनेस मॉडल है, इसमें क्या क्या डिफरेंसेस है, दोनों का बिजनेस मॉडल कैसे अलग है। इसके पहले मैंने आरती ड्रग्स पे एक डिटेल वीडियो क्रिएट किया था जो आप देख सकते हो। तो आरती फार्मा का जो बिजनेस है वो रिसेंटली डीमर्ज हुआ था आरती इंडस्ट्रीज से। सो लेट्स डिस्कस मोर अबाउट कि दोनों के बिजनेसेस में क्या क्या डिफरेंस है, वैल्यूएशन किसका बेटर है, कौन कौन से प्रोडक्ट्स ये जो कंपनीज है दोनों कंपनीज वो मैन्युफैक्चर करती है, आगे जाके दोनों कंपनीज का ग्रोथ का क्या पोटेंशियल है, दोनों कंपनीज में से कौन से कंपनी में बेटर मार्जिन है, ग्रॉस मार्जिन या एबिटा मार्जिन, इसके बारे में डिस्कस करेंगे। एंड आगे जाके किस में ज़्यादा रेवेन्यू की विजिबिलिटी है या ग्रोथ है, ये सब के बारे में ये वीडियो में काफ़ी डिटेल में डिस्कस करेंगे। तो वरुण आज मेरे साथ है। तो वरुण, लेट्स स्टार्ट विद कि ये जो दोनों कंपनीज है उनका बेसिक क्या डिफरेंस है, कौन कौन से अलग अलग ये जो प्रोडक्ट्स है ये दोनों कंपनीज मैन्युफैक्चर करती है। एंड आगे जाके फिर बाद में डिटेल में डिस्कस करेंगे कि किसका कितना चाइना पे डिपेंडेंसी है, और आगे जाके दोनों कंपनीज के क्या क्या जो कैपेक्सेस है जो अलाइंड है इसके बारे में डिस्कस करेंगे।
अगर हम इन दोनों कंपनीज के बारे में देखते हैं तो लाइक वन थिंग दैट वी कैन फाइंड वेरी कॉमन इन दिस बिजनेस इज द आरती ग्रुप का डीएनए. So both of these companies belong to the Aarti Group, and like a lot of the upper management is very common between like Aarti Industries, Aarti Drugs and Aarti Pharma Labs. So जो एक चीज हम देखते हैं कि आरती ग्रुप का जो प्राइमरी फिलोसफी है दैट इज ऑफ कॉस्ट लीडरशिप एंड बैकवर्ड इंटीग्रेशन. So one thing that they do very well is become the lowest cost producer of any product that they are making, and they do this through scale and through backward integration. So that DNA is present in both of these companies, Aarti Pharma Labs and Aarti Drugs. And the other thing that we can see is there is a overlap in management between these companies. So if you look at like Mr. Rashesh Gogri, who has been with Aarti Industries for like Aarti Industries and Aarti Drugs for a number of years. So currently he is the vice chairman and the managing director at Aarti Industries, and he is also the managing director at Aarti Drugs. And now post the demerger, he is the chairman of Aarti Pharma Labs. But if you go back into the Aarti Industries con calls, you will see that he is the one who is actually responsible for the pharma division of Aarti Industries. So he's the one who has like run and grown this business since the past 10-20 years or so.
Right. So another thing, if you check Varun about the Rashesh Gogri ji, I think he's a son of Mr. Chandrakant Gogri.
Right.
And Chandrakant Gogri is a person who started Aarti Industries back in probably 30 years ago, and then that family had continued and diversified in many other businesses. So today probably they have about 4 listed companies, which are Aarti Industries, Aarti Drugs, Aarti Pharma, and Valiant Organics is also the group company. Another IPO came recently, which is Valiant Laboratories. Valiant Organics का ही एक पार्ट था जिसमें वो पैरासीटामोल मैन्युफैक्चर करते थे. So that company also got demerged and उसका भी अभी IPO है. तो more or less 5 listed companies है ये सेम ग्रुप का. So let's continue with कि ये ग्रुप का बाकी क्या DNA है and how they progressed over the period of time.
Right. So Aarti Drugs and Aarti Pharma Labs, they both follow this primary philosophy of the Aarti Group, where they try to gain a cost leadership in their products, both through scale and more importantly through backward integration. It is very important to understand that they are mostly backward integrated in most of the businesses that they are present in. So if you look at the business of Aarti Drugs and Aarti Pharma Labs, so both of them, like we have talked about the pharma value chain in many videos before. Right. So like the pharma value chain goes like this, like we start with basic raw materials, like your key starting materials, and using the key starting materials you make intermediates, and using intermediates you make APIs, and with using APIs and you add a couple of excipients and you get your finished dosage formulations. So Aarti Pharma Labs and Aarti Drugs are both present in intermediates and APIs. So they manufacture both intermediates and APIs which they sell to other pharma companies. Aarti Drugs is also present in the formulations business, which we will discuss shortly, but majorly most of their revenues comes from APIs and some intermediates for both of these businesses. So let's start with actually Aarti Drugs business. Like we can get an idea of what Aarti Drugs does exactly, and then we'll get an idea of what Aarti Pharma Labs does exactly. Then we can do a comparison of which company is better and where the valuations are better.
Right.
So let's start with Aarti Drugs. So Aarti Drugs was started in 1984. So currently they have almost 4 decades of experience in API manufacturing. So this company was not a part of Aarti Industries, like how Aarti Pharma Labs has now been demerged. It was always a separately listed entity. So it was started back in 1984, and they also have a subsidiary called Pinnacle Life Sciences where they manufacture formulations. So the formulations that they manufacture here are mostly backward integrated. That means the APIs that they make are basically used to make the formulations that they sell in Pinnacle Life Sciences. Apart from that, they also have a division for specialty chemicals, which is a higher margin business for them. In this segment, they are mostly present in, like sulfonation and benzene chemistry, which is, again, the strength of the Aarti Group.
Right.
So, like, if you look at, like, a lot of these products that, like metformin and fluoroquinolones, like, products like ciprofloxacin, and a lot of these other products, like, Aarti Drugs is the largest producer of all of these products globally.
And if you check, the similar DNA has been there from the Aarti Industries as well, which is mostly a agrochemical focused company. I have created a separate dedicated video on Aarti Industries also, which you can watch. And Aarti Industries, if you check the business model, so they are mostly into the benzene chemistry, and they are probably the third largest manufacturer of the benzene in the world. So these group companies are taking that legacy and continuing their business, where cost leadership is one of the key factor. And another thing is like the backward integration, where Aarti Industries also, if you check the details of some of their products, so they might have about 10-step backward integration with some of the products. So that is the DNA of this group or this family.
Right. So now if we come to, the revenue mix, almost 80% of Aarti Drugs revenues comes from APIs. Another 14% comes from formulations and 6% comes from specialty chemicals. So in formulations, like we discussed, they have a subsidiary called Pinnacle Life Sciences where they manufacture the formulations. And the specialty chemicals segment is a higher margin business for them than, the APIs and the formulation business. But again, currently it is a very small part of the business. If you look at the margin hierarchy for them, like the gross margins, the management has said that in specialty chemicals, they get as high as almost 50% gross margins. Whereas, their API and formulation business has much lower gross margin. The API business, they get somewhere around 25 to 30% gross margins. And in the formulation business, about 25 to 28% currently they are getting. So the formulation business, if you look at it currently, it is mostly a domestically focused, contract manufacturing / toll manufacturing sort of business that they are doing. What the management is trying to do is increase their exports, and in the export markets, what they do is they own the IP, they have their own brand, so they will get better margins in the export markets than they do currently in the domestic market. So the margins from the formulation business is expected to go up as the exports increase, but currently it is about at a 25 to 28% gross margin. Then if we look at like their revenue mix by therapy, then antibiotic is their largest segment, right, followed by anti-protozoal, anti-diabetic, anti-inflammatory, and a bunch of other therapies that they are present in. So like these products that we discussed, where Aarti Drugs is one of the largest players globally. So if we look at this product called metronidazole, which is like an anti-protozoal. So in this product, Aarti Drugs is the largest player in the world. There are fluoroquinolones, which are basically antibiotics. So in this, where the company has, major products like ciprofloxacin or ofloxacin or norfloxacin.
Or leofloxacin. Many products are there.
Right.
Another thing is like if you check, most of the competition for this product is directly from the China. Because India, if you check, there is hardly any presence into antibiotic products, right? So if you check, like China generally are into those products where the mass manufacturing is possible and not in mostly the specialty chemical products. So if you check the DNA of this company or the product mix of this company, most of the products you will see where they are also into mass manufacturing. We'll come to that point going ahead later. But I think that most of the products which Aarti Drugs is manufacturing, they have the large competition from the China. So that is another key point one should understand. And then we'll also discuss about what is the type of backward integration this company have. are they importing any raw material or basic chemicals from the China, and what type of backward integration the company has done till now, and where they lack and where there is a going forward improvement possible to reduce that dependency on the China. So we'll discuss about this thing as we'll go ahead in this video.
Right. So then if we look at like a couple of other products that the company has, like metformin, where they are, a fairly large player. Again, this is a anti-diabetic product and it is a large volume product. We have like other big players in India like Granules.
Right.
We have Laurus Labs is entering into metformin production. Aarti Drugs is mostly present in these very large volume products where, like economies of scale are important to reduce the cost of production. Now, if we look at the geographies that Aarti Drugs mostly operates in, almost 60%, more than 60% of their revenue in FY23 came from the domestic market. And only about 38% of their revenue came from the export market. Now, when you look at the markets where, like Aarti Drugs actually exports to, so like one of their largest markets is Brazil, so which lies in Latin America. Asia is one of their largest markets where, they supply to, like countries like Pakistan, Indonesia, and a lot of these Middle Eastern countries. The company has, like EU GMP certified facilities where, they export to countries like Germany and Switzerland, but again, in smaller quantities. Then they have, North America as a geography. But in North America, they do not export to US or Canada. Their revenues actually come from Mexico. So Mexico is a fairly large market for them. But mostly, if you look at it, the company is not present in like the highly regulated markets like, US or EU or, Japan. So if we discuss like the dependency on China that Aarti Drugs has, like Shashank said, China is mostly their competition, but the company is also a little bit dependent on China for their raw materials, right. Mainly because of the cost factor. Like a lot of the raw materials that they can source is the cheapest from China. The company has said that almost 40 to 50% of their raw material is actually imported from China. So almost half of all their raw materials come from China. But the management has said that, like of this, half can either be procured domestically or it can be procured from other countries. The only reason they procure it from China is because they get it cheaper there. So ultimately, like they have about a 20 to 25% dependence on China for their raw materials. And the one thing that you need to understand is like while the number looks small, where only 20 to 25% of the raw materials they are completely dependent on China. But the thing is, if those raw materials are absolutely necessary, then the company still has a risk where even though the number is small, like if they cannot produce without these certain important raw materials which they need to source from China, then it is still a big risk to their business. So while the management has said that almost 20 to 25% of their raw materials comes from China, we don't know the criticality of these raw materials, right, for their business. Now, when we come to the manufacturing facilities, the company mainly has, manufacturing facilities in Maharashtra and Gujarat. So they have a lot of facilities in Maharashtra and Tarapur, and this one facility called E22, which was a USFDA approved facility initially. So from there, the company used to manufacture and export to the US. But in March of 2015, they got an import alert for this facility, right. And that import alert till this day in FY24 has not been resolved. So the company has zero exports to the US currently. They've said that they have engaged a consultant and a lot of things have been going on for the past few years, but there has been no resolution on this front. So that is why most of their revenues come from these lesser regulated markets, because this E22 facility where they used to get like which is again, it has a EU GMP certification, so the EU exports actually happen from there, but the rest of the facilities are actually like not regulated market standards. So most of their revenues actually come from the lesser regulated markets like we have discussed. The other thing we have to discuss about their manufacturing facilities is the company basically uses like large dedicated plants. We have in previous videos discussed the difference between a dedicated plant versus a multi-purpose plant, right? And dedicated plants are essentially used to reduce cost of production. And Aarti Drugs uses dedicated plants. If you see, the management has actually said in the Q4 FY21 con call that almost 80% of their revenues come from dedicated plants, and they don't use multi-purpose plants a lot because it takes them like 5 to 7 days to do the cleaning and like changeover for the newer product and stuff. And the products that they manufacture are majorly like large volume products, so they prefer to have dedicated plants.
Right. One point I would like to add here, Varun, is when I was doing some scuttlebutt and when I visited one of the process equipment manufacturing company, so they were manufacturing equipment for Aarti Drugs, and it was a continuous fluid bed dryer. So where you need a continuous basically flow chemistry kind of equipment or process equipment, by nature you can understand that it is generally used for where the mass manufacturing is happening, and it is not for the batch manufacturing. So definitely you can connect these dots and understand more and more about different businesses. And actually this scuttlebutt helps you to understand various points which are not directly written in any annual report or any conference call. It is your experience and your understanding which you can join, and then you'll have a much better understanding over the period of time. So at Value Educator, we keep on doing the scuttlebutt, trying to visit as much factories or as much, and also the plant visit we try to do. Along with that, we also have taken the microcap club members for a couple of plant visits, and it was a great experience for all the club members who have visited the plants, so that they also understand what is happening actually on the ground. And that's why we have created this product called Microcap Club, where we actually try to do this scuttlebutt with club members. We share various reports, our understanding on various stocks, various businesses, and mostly all these businesses are from the microcap side, where the identification is very low, the research is very thin, and that's why most of the time valuations what we get are the very lucrative, very low valuations. And provided that the growth is there, management is good, niche business is available, scalability is there, and many other factors. So if you have not joined the microcap club, you can check the link of it in the description below. You'll get all the details on my website. We also have the app called as Value Educator. There also you can check the details for the same. And if you are looking for any research platform, definitely you can join the microcap club. Microcap Club is not any recommendation or tips or any advisory service. This is just a platform for the like-minded investors where they can come together and share the ideas which can help all the investors to grow together. So definitely you can check the details about the Microcap Club. So coming back to the Aarti Drugs, let's now discuss about their financials, what they have done over the period of time in their revenues and profitability along with the margins.
Right. So if you look at the revenues of Aarti Drugs, they did about 2,700 crores of revenues last year in FY23, and the revenues have grown at about a 12% CAGR over the past 7-8 years. If you look at the margins for Aarti Drugs, so the gross margins are actually extremely low for an API business, which gives us an idea that the products that they manufacture are more of a commodity in nature. So they have on average somewhere around a 30%, 32% a gross margin on most of their products, and EBITDA margins in the range of like 11 to 15%. So this itself tells you that the products that the company manufactures are a little bit commodity in nature because the margins are so low. If you look at like other API companies, they have EBITDA margins of over 20-25%, where the product is truly specialty, and whereas Aarti Drugs has about 11 to 12-13% EBITDA margin because of the commodity nature of their products. The debt situation of the company has improved a lot, over the past few years. Like historically, if you look at, the company, they always had a debt equity ratio of over 1 time. But,
Right.
Over the past 3-4 years, the company has significantly brought down this debt. And currently they are at somewhere around 0.5 times debt equity. And currently the company is actually doing some capexes, and the management has said that even post those capexes, they do not expect the debt equity ratio to go above 0.7 times. So this is one thing that the company has done very well over the past few years, brought down their leverage significantly, right? So let's take a look at like what the future looks like for Aarti Drugs. So in FY21, the company announced a capex plan of about 600 crores over the next 3 years, right? And over the last 2 years, they have actually done about 315 crores of capex, like up until FY24. In FY24, they have a plan of doing about 250 to 300 crores capex, which will complete this whole 600 crore capex. Of this, about 109, 110 crores was already done till Q2, and the rest will be done over the next 2 quarters. So this capex that was done until now was mostly spent, like on brownfield expansion of existing products, and a lot of backward integration that they have done for a lot of their products. They have 2 greenfield projects which are going to be coming online by the end of this year. So management has said that Q4 FY24 there will be 2 greenfield products that is coming online. So one is going to be in Tarapur in Maharashtra, which will be for dermatology APIs, and there will be one in Saika, Gujarat, which is for specialty chemicals. So the specialty chemical segment management has already done a brownfield expansion over the past 2 years. and management has said that they will be doubling their specialty chemicals revenue with this brownfield capex only. This new greenfield capex that is going to be coming online by the end of this year will add further growth to this specialty chemicals segment. The Tarapur greenfield capex is going to be coming for dermatology APIs. So they will be manufacturing an API called salicylic acid. So this is a dermatology API, and management has said that this product is completely imported from China today. So they have said that last year there was about 300 to 400 crores of import from China of this product, and that is the opportunity that is available to them. They will be the only domestic manufacturer for this product, and they are already talking to clients for taking this product. Apart from that, the management has said that there will be a brownfield expansion in Saregam, Gujarat for their anti-diabetic portfolio. But this will be again a smaller capex compared to the other bigger greenfield capex. So the two greenfield capexes are expected to come online by the end of Q4 FY24, and the brownfield expansion in Saregam is expected to come online in FY25. So management has said that post the completion of this capex, they can do a revenue of close to 4,000 to 4,500 crores. And currently they have a revenue of 2,700 crores. Now let's come to Aarti PharmaLabs. So Aarti PharmaLabs is a recently demerged entity. Like up until last year, it was the pharma division of Aarti Industries, which is a much bigger and more diversified chemical company. So Aarti PharmaLabs started in 2001 when Aarti Industries set up a manufacturing facility for Xanthine. So Xanthine is a chemistry where the company is very good at, and they are one of the largest producers of xanthine derivatives. So they actually started as the pharma division of Aarti Industries, and today they are like the only non-Chinese integrated facility for caffeine, for the production of caffeine. Their major product is caffeine. Apart from this, the company is also involved in, manufacturing API and intermediates for, various, lower volume but higher margin products, unlike Aarti Drugs. And they also have a CDMO segment where they manufacture APIs and intermediates for innovative pharma companies. If you look at the geographical split for Aarti PharmaLabs, it's almost a 50-50 split between, domestic and exports. And about 57% of their revenues actually come from xanthine derivatives, which is, their major segment. 37% of their revenues come from API and intermediates, and about 6% comes from their CDMO or CMO business. So currently the CDMO business is a very small business for them, but it can grow significantly over the next few years.
And generally, if they really have the contracts from the innovative companies, the margin expansion is also expected, because when you actually manufacture for these innovator companies, they have the bit sticky business, plus the margins are also better. So it's all about how they scale up. More details are not today available for this business. Management has not disclosed which molecules they have, at which phase they are currently into. So these details are today not available. But I'm expecting going forward, as this segment of the business will scale up, management may share more details about the same. So I think Aarti PharmaLabs is into the right kind of a segment, or they have the right strategy compared to Aarti Drugs, as they are focusing going forward more on the CDMO side, where good scale up can happen and the margins margins may increase going forward, and along with that the stickiness of the business may also increase, which is definitely not there today in both the businesses. But that is the expectation, that in next 5-7 years this business will be having a better margins with more, you can say, the stickiness with the client, so that the more and more contracts they can get. So now let's discuss more about their individual different segments into Aarti PharmaLabs business. So first business segment which they have is into the xanthine derivatives. Aarti PharmaLabs is actually the largest manufacturer of xanthine derivatives, which is again completely backward integrated outside China.
Right. So if you look at xanthines, like xanthines are basically like these chemical compounds that are, found naturally occurring, either in the human body or, in coffee beans and stuff. So there are, a couple of, products which come under this chemistry and they are called xanthine derivatives. So here if we see, we have three molecules, we have caffeine, we have theophylline, and we have theobromine. So the company manufactures these products, and you can see how similar they are in chemical structure. So they are usually grouped under, the one same chemistry, and they're called xanthine derivatives, which the company manufactures. Yeah. So these products are majorly used in, soft drinks like colas and, energy drinks. And there is also, like an application in pharmaceuticals and nutraceuticals. So like, soft drinks, we know, your Coke and Pepsi, they contain caffeine, which is where, like the caffeine product actually goes. And then we are seeing like a huge demand for energy drinks, where we have seen, like Coke and Pepsi launch their own, economical version of energy drinks over the past few years. So their portfolio of energy drinks has actually been growing, significantly over the past few years. So a major component in these energy drinks is also caffeine. Apart from that, they are used in pharmaceuticals as bronchodilators, which is basically they are used in treating diseases like asthma and, like other respiratory diseases. So they are also used in like nutraceuticals, like for example, a pre-workout, which, has a high caffeine content. So caffeine is used in those products as well. About 50% of the revenues from this segment are exported and about 50% is sold domestically. They are the largest domestic player and they are one of the largest integrated players globally outside of China. So most of the other countries actually import the intermediates from China and they manufacture these products. But Aarti Pharmalabs is completely independent of China. In this latest con call, the Q2 FY24 con call, the management actually said that, they had a huge demand from their customers that they want manufacturing that is completely independent of China, and that is why the company has done a backward integration for the xanthine derivatives, and currently they are completely independent of China. That means they manufacture from the KSMs to the end product. Then if we talk about, their API and intermediate segment, they are present in a lot of therapies like, your anti-hypertensive, they are anti-cancer, your CNS, central nervous system diseases. And, they manufacture basically lower volume but higher margin products in these therapeutic areas. So apart from that, they also manufacture the intermediates for these products, partly as backward integration, and also, they sell it to other API companies as well. So one interesting thing that the company has is, they have a good capacity for HP APIs. They have capacity for corticosteroids, which are generally higher gross margin products. So one interesting thing to note here is that 50% of their revenues from exports, but a majority of this comes from highly regulated markets like US, EU and Japan.
Right.
So these are like highly regulated markets where you get a much better price realization because the regulatory standards are much higher and the cost of production actually increases. So usually in these markets, like API companies get much better pricing. So the management has said that even the products that they sell domestically are actually ultimately exported. So, they sell to companies like, Sun Pharma or Cipla or Dr. Reddy's, who will ultimately be selling this product in US. So they need API that is manufactured in a US FDA approved facility. So those are the APIs that they actually source from Aarti Pharmalabs. So ultimately the management has said that more than 75-80% of their revenues are actually exported to regulated markets. So one major product that they have in this segment is Ramipril. So this is a drug that is used to treat hypertension and heart failure. So they make both the API and the intermediate for this product, which is sold in the domestic market as well as exported in, like high quantities. This is one of the major products in this segment. Then we come to the CDMO segment, and this is a relatively new business for the company. Like up until like 1 year ago, like the company was not even talking about this segment as a separate segment. So in this business, it is like a regular CDMO business is what we understand, where, they manufacture APIs and, regulatory starting materials, regulatory intermediates for, innovative pharma companies. They also have a CMO division, and the CMO revenues are also lumped in with the CDMO business.
Right.
So we don't have an idea of how much revenue comes from the CMO business and how much actually comes from the innovative business. The management has said that they have, like 16 commercial products, but we have no idea whether these are, like innovative products or are they, generic CMO products. They said that they also have, like about 14 products under development. But the interesting thing to note here is that the CMO that they do in this segment is mostly for the regulated markets. It is not for the lesser regulated market or for the domestic companies. Management has said that they are currently working with 14 innovator companies and big pharma companies. And it is yet to be seen how they scale this business. It is a relatively new business, so it is still too early to tell, where this business can go in the future. But again, Aarti Pharmalabs has the DNA, they have the experience to do it, and they can very well scale this business in the future. Now coming to their manufacturing facilities, the company has 6 manufacturing facilities currently, plus they are going to be doing a big greenfield capex in Atali, Gujarat as well. Again, like Aarti Drugs, most of their facilities are in Gujarat and Maharashtra, mostly Tarapur.
Right.
But one interesting thing about Aarti Pharma Labs is they majorly use multi-purpose plants because the products that they manufacture are lower volume but higher in margin. So they will be producing a lot of different products. They have, like over 50 commercial US DMFs. And these are basically higher value products than, like Aarti Drugs actually manufactures. If we come to their China dependency, like in the Q1 FY21 con call, the management has said that, for most of their products, they are, backward integrated. But there is still, like some sort of dependence on China for their, steroid portfolio of products. So if you look at, steroidal APIs, they are mostly made through fermentation.
Right.
And fermentation, in India, we don't have a lot of capacities. Most of, the fermentation based APIs actually come from China or, the fermentation based intermediates, which the company actually imports and manufactures the steroid APIs in India.
Right. And another thing which I have seen about this Aarti Group is that even if that particular company don't have the backward integration with them, what they do is they will ask their some of the sister concern. Like for example, I was checking the environmental clearance reports of the Valiant Organics, and that time I came to know that the Valiant Organics will be manufacturing lot of intermediates which will be actually going for the APIs which will be manufactured by the Aarti Pharma Labs. So even if that particular company don't have the complete backward integration, that the Aarti Group as a whole might have that solution, or they can procure from their sister companies. So that also one should understand and then correlate with how much dependency they have from the various geographies and particularly from the China. So that is also an important point while you are analyzing these particularly Aarti Group companies.
Right. So now coming to the financials of Aarti Pharma Labs, like, we can see like since 2009, this business has actually scaled beautifully for the company, like up until last year, it was, the pharma division of Aarti Industries. It was incubated inside Aarti Industries. And now it is a separately demerged company. So they have almost 2,000 crores of revenue, and, the revenues have actually grown at, a CAGR of 24% over the last, 12, 13 years. If we come to the EBIT margin of Aarti Pharma Labs, they have somewhere around, like 14-15% EBIT margins currently. So the reason we have taken EBIT margin here is because, up until now it was a division of Aarti Industries.
Right.
And the management was not separately disclosing the EBITDA margins because, there was a lot of common infrastructure that both of these companies were using, and depreciation was common for both the entities. So we only have the EBIT margins to go on, and the management has said that on an EBITDA level, they can sustainably earn over 20% in like 2 or 3 years. The other important thing to remember is that Aarti Pharma Labs is completely debt free. So they are going to be doing like a big greenfield capex now. And a lot of that is also going to be coming from internal accruals. They'll be using some debt, but they are in a very comfortable position when it comes to leverage. So the future outlook for this company, if we look at, the company has recently done a backward integration for Xanthine, like we discussed. The customers wanted, a completely, they wanted, like products that were completely independent of China. And for that reason, they had done, a backward integration for the Xanthine portfolio. And this capex came online in Q2 of FY24. So we will see the effect of this going forward in the next few quarters. Apart from that, the company has a 350 crore greenfield capex in Atali, Gujarat. So the management has actually procured like 80 acres of land in Atali, Gujarat, and this land will be developed over the next few years for all of their future growth capexes, right? So the first phase of this, the management has said, will come online in the second half of FY24. So end of next year, this greenfield capex will be online. Apart from that, they are also planning a brownfield capex for, Xanthine. So the management has not discussed numbers for this brownfield expansion, but it will be like much smaller than the Atali capex because again, it's a brownfield capex. So the management has said that, they can grow their EBITDA at 10 to 15% in FY24. So that is the kind of growth that we are going to be seeing this year. Future growth guidance, the management has currently not given, but like I said, the management has said that their long-term EBITDA margins will be somewhere around 20%.
So let's now discuss about the differences between these two companies, Aarti Pharma and Aarti Drugs. So if you can check about their product profile, so basically Aarti Drugs is majorly into commodity type of products where they are into the mass manufacturing and where generally the margins are low. Compared to that, Aarti Pharma is majorly into the low volume product where generally the margins are high. So that is the first basic difference between these two companies. The second point, if you check, it is also a related point that in case of Aarti Drugs, they use the basically a dedicated plant because the manufacturing is mass scale or a commodity manufacturing, very large volume manufacturing they do. Compared to that, Aarti Pharma have the MPP or multi-purpose plant because number of products are higher and batch sizes are smaller. So Aarti Pharma type of companies will never use the process equipment like fluid bed dryers, or they won't enter into the flow chemistry, or they won't enter into the continuous flow chemistry because they are into the batch manufacturing and not into the large scale manufacturing. And another comparison point, if you'll check, then Aarti Drugs is mostly into the domestic and non-regulated markets. While if you compare that with the Aarti Pharma Labs, so they are into the domestic as well as mostly into the regulated markets. As Varun has mentioned earlier, about 70 to 80% of the revenues for the Aarti Pharma is from the export. So this 70 to 80% of the revenues also include the deemed export. So deemed export means like Aarti Pharma is giving the product to the Sun Pharma and then the Sun Pharma is finally exporting. So most of the, if you can check the manufacturing which happens at the Aarti Pharma lab site is eventually exported to US and EU and Japan and various regulated markets.
Right. The other point that we can look at between both of these companies is, their gross margins. Like Aarti Drugs actually has, like much lower gross margins than Aarti Pharma Labs. It is like a related point to what, Shashank has discussed. They are mostly commodity products. Here you can see the gross margins of Aarti Drugs, which is somewhere around 30%, which is like what you get for, a commodity nature of products. Aarti Pharma Labs, we don't have the gross margin data because it was, a part of Aarti Industries and they were not disclosing it separately. But if we look at, the last 2 years data that we do have from their annual report, they have somewhere between a 45 to 50% gross margin.
Right.
So which is indicative of a more specialty type of products. Even if you look at their EBIT margins, like Aarti Pharma has slightly higher EBIT margins than Aarti Drugs. And one of the reasons that could be for this is because the depreciation is probably much higher for Aarti Pharma Labs because they are setting up these dedicated facilities that are like much more costly to set up. Whereas, the facilities that Aarti Drugs is setting up is like much lower in cost. So that is why the EBIT margins actually look kind of similar for them. But in general, like Aarti Pharma Labs is involved in, like more specialty type of products where they have, like better margins. The other point that we have already discussed, the Chinese dependency. Both of these companies have, a low to medium dependency on China. They are not very dependent on China, but again, they are dependent on them for a few critical, raw materials. And one important thing to understand is, like revenue visibility and the ability to pass on their cost increases. Aarti Drugs has lower revenue visibility because they mostly operate on short-term contracts. They have either, like 30 days supply contracts with companies or at max, 3 months contracts. So, we can see in this con call where, the management has said that with a few of the MNCs that they export to, they have, like 3 months contracts. But, a lot of the domestic and the ROW market is mostly, done through like short-term contracts, 30-day contracts. Whereas Aarti Pharma Labs, you can see that the management has said that 60-70% of their revenue is actually done through, fixed contracts. But one important thing to understand here is, this reduces their ability to pass on cost increases. Because, like Aarti Drugs contracts are short term in nature, they can, immediately pass on, the increase in their raw material cost. Whereas Aarti Pharma Labs is more or less stuck in, like the fixed volume contracts. They can pass on some part of it, but not a lot of it. So that is one important thing that, we have already seen that, in the FY22, FY23 cycle for pharma and chemical companies where the commodity companies actually ended up doing better than the specialty companies because the commodity companies were actually able to pass on their raw material costs faster. That is it for the major differences between, like these two businesses, Aarti Drugs and Aarti Pharma Labs. And now let us come to the valuations for, like what kind of valuations are these businesses available at. So if you look at Aarti Drugs today, it is available at a PE of 27, 1.7 times price to sales, and about 4 times price to book, 16 times EV/EBITDA. And Aarti PHARMALABS is available at a 20 PE, 2 times price to sales, and about 11 times EV/EBITDA. So prima facie, looking at this, it looks like Aarti PHARMALABS is like much cheaper than Aarti Drugs, which is true. Like Aarti Pharma has like a more specialty kind of nature for the business. The sustainability of revenues are actually much higher. But Aarti Drugs is available at a better valuation, primarily because there is a lot of growth that is expected in this business over the next 2 to 3 years. Post FY24, the company is going to be completely done with all the capex, and now to go from 2,700 crores of revenues to 4,500 crores of revenue, they're not going to need much additional capex. So
Right.
the growth is being baked into the valuations. But yes, Aarti PHARMALABS still looks like it is available at attractive valuations. And if the management can actually, scale this business, this could be, a big wealth creator.
Right.
But one thing you have to keep in mind is, there is a big greenfield capex coming online. And that means that, like costs are going to increase, depreciation is going to increase, which could cause a contraction in margin for this company in the short term. But looking at the valuations and the business model of both these companies, it looks like over the long term, Aarti PHARMALABS is better placed to be, a wealth creator rather than Aarti Drugs.
Right. So I also have the similar view as Varun. I will go with the Aarti Pharma. I'll add a couple of more points here. If you check when the business got demerged, the Aarti Industries management also have taken or increased their stake. Recently also they have increased the stake, and the same business was available, I think, below 300 rupees also, where the valuations were quite lucrative. Right now it might have increased a bit, but I think like this business has a good potential to go, and right now the valuations are not that extremely expensive with the kind of the business which is on the offer. So definitely it's not a recommendation, it's not like any advice. Just I'm sharing what I think about the business, and if we compare between the Aarti Drugs and Aarti PHARMALABS, which is basically the two entities of the same Aarti Group or Aarti family. So I think Aarti Pharma is a better business, and valuations are also not that expensive. So please let me know in the comment section which company you will like to invest, or which company you like more compared to Aarti Drugs or Aarti Pharma, and what is the reason for the same. You can post your answers in the comment sections. And if you want us to create more videos on specific different companies or businesses, please let us know that into the comment section. We'll definitely can create a very detailed videos like this for other companies as well. And if you like this video, make sure you hit the like button and subscribe to Value Educator channel. And I keep sharing these videos every Saturday at 11 o'clock. So don't miss these videos. Let's meet next Saturday at 11 o'clock with detailed understanding and analysis of one of the small and micro size company.